Hello, fellow traders. Well, it came to pass just as I've said in my previous videos. The market, the S&P, was going to take out the previous high put in on January 1st, 2022. And here we are, January 1st, 2022. Here we are on January 19th, 2024. And if we draw a line from the high at 2022 to the high that was just put in on January 19th, 2024, we see that we have an all-time high for the S&P. But what's going to happen next? Of course, what happened Friday is in the rearview mirror. What's going to happen next? Well, look what happened in 2022. Will the same thing happen in 2024? The market, as soon as it hit an all-time high, crashed down. And it's taken 2 years to recover from the high of January 2022. So will the market crash from its high that was put in just on Friday, January 19th? No, it will not. And I'll tell you why. Because what happened in January 2022 was as a result of the Federal Reserve. And look what happened. January 22, right here. This chart is the Federal Reserve interest rate as of the beginning of 2022. And look, it was almost zero. And just at the beginning of 2022, the rate shot up. And that's what caused this crash in the market of 2022. Will that happen now? No, it will not. And here's why. Right now, we're going into the next FOMC meeting that's going to take place on January 31st. And right here, the current target rate is 5.25 to 5.50. And the probability is that the Federal Reserve is going to keep the rate at 5.25 to 5.50. The rate is not going to shoot up. In fact, the Federal Reserve has already said they're going to have at least 3 interest rate cuts in 2024. So the reason that the market crashed after it put in its all-time high on January 2022 was strictly because of the Federal Reserve raising interest rates. And that's not going to happen this time around. So let's look at the daily chart. This is my chart of the S&P E-mini futures. And here is my Taylor forecast trading zone for Friday, January 19th. And the market basically traded just around the forecast resistance and then took off from there. Now, typically, when the market goes up on a Friday, as dramatically as it did on January 19th, usually it's going to continue that on the following Monday. Now, here's my calculated trading zone forecast for Monday, January 22nd. And the forecast is for the market to trade higher, but we really have to see if 2 things happen. Number one, will the market take a breather? I mean, this was a very significant increase on January 19th. So really, and it was out of character for what should have happened. So I would expect the market to take a little bit of a breather from this huge run-up that happened on Friday. And so if the market opens somewhere below the previous close, if there's a gap trade opportunity, I would look to see that that gap trade is going to be successful. I think it might be successful, but of course, the big picture is we're not going to see a market crash as happened in January 2022. The economy is healthy. Economics today is skewed by the fervor of politics. And one side says the market's on fumes. Another side says the market is doing well. Well, which is the truth? Well, are you going to believe the people who say the market is running on fumes? Or are you going to believe the numbers? Always believe the numbers. Always believe the numbers, friends. And I'm not being political here. I'm not taking sides. I'm just saying that the economy is doing very well. So where is the S&P headed on Monday? Well, here's the forecast. If you have the Taylor calculator and you've applied it to your trading, you know how effective it is at helping you make better trading decisions. And so we also have to know where the big picture is, what the big picture is. And the big picture is the economy is great. The economy is doing very well. Sure, we have an election, and that's going to skew things, but nevertheless, always look at the numbers. And while you're trading the daily charts, Always keep an eye on the big picture. Keep an eye on the Federal Reserve. Again, the next Federal Reserve FOMC meeting is on January 31st. And we'll see what happens then. But the forecast is that the Federal Reserve is going to keep rates where they are now at 5.25 to 5.50. So let's see what happens this week. We're starting off at an all-time high. So now I would expect the market to continue higher. And I'm going to use the Taylor calculated forecast for my trading, together with the 6 trade setups that you know I teach in my course: GST, TMC, gap, support and resistance, trend, time and price, momentum, and candlestick. And with knowledge, you can be a better trader. So that's my video for today. If you did great on Friday, congratulations. Trade safely. Thanks so much for watching. Use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.